What's good, people, traders, and dedicated gold chasers? Welcome back to another video at the Modern Day Trader with your boy Marcy. And today we are going to be doing an analysis for this week, incorporating what we learned last week about the commitment of traders report. And one of the pairs that are quite high on my list, as I mentioned last week, coming into this week, is pound yen. Now, something that I want you to note is the way pound has actually traded this week. It's been very range bound. It's been very consolidatory. And my expectations for pound is that it's going to continue moving bearish, right? So now all we need to do is anticipate where price action could magnetize to before potentially falling to the downside, or what would our areas of invalidation be, etc., right? So something that I wanted to note is that if you take a look at this impulsive push to the downside, you can see that price action in and around these liquidity areas that I've marked is actually slightly under the discount area. So we're still in premium. So what that means is that my areas of confluence here with these liquidity areas, and the reason why I think these are high liquidity areas are just because if you look at them, multiple people are probably trying to sell or from here, or they're trying to have their buy stops above these areas to anticipate buys from a 4H perspective, because you can see that we made these lows, lower high, lower lows, right? With that in mind, you kind of just anticipate that there's a lot of orders, stop losses, whatever the case may be, are above these areas. So those are quite clear liquidity pools that we can induce. So I'm anticipating that early on in the week, next week, that we could potentially induce these areas right here. So something somewhat like this, where you can get that push to the upside, and then all we're looking for is the shift of structure, and then you can start to anticipate whatever entry model you use. You can start to anticipate that price action will continue to the downside, and that's what I'm looking at. Now we have this demand or supply zone. We have this point of interest up here. From a daily perspective, after having this impulsive push to the downside, we have those areas right there where price action could potentially gravitate to. However, I find that even though we have this inefficient price action right here, I find that there's a high chance that price action will reject from these zones. All we're looking for is for price action to induce buyers and take out sell stop losses in and around these areas. And once that happens, if we get the immediate reaction from these areas, or even if we get a consolidation and then you see another push to the upside, inducing liquidity again, taking out stops, and then you then see the push to the downside, somewhat kind of like this. uh that's what I'd be looking for. I would want price action to push to the upside and then see the push to the downside, right? And that's just based on what I can see from the chart. The chart is at the current moment from a 4H perspective pretty bearish, and we kind of anticipating that this bearish pressure will continue to the downside. And then the second pair that I had on watch was AUD JPY. And the reason why I think I have a lot of JPYs, or these two JPY pairs on the list, is because I'm anticipating, with everything happening in the market right now, that a lot of movement is happening in these conditions. The sentiment is shifting, and there's more people shifting to the safe haven that is JPY. And with that being mentioned, if JPY gets stronger, there's a high chance that these pairs will then start to push to the downside. So all I'm doing is I'm looking at the markets and I'm anticipating where we could potentially grab liquidity, shift structure. And once we get the shift of structure, that's the confirmation that now we can start anticipating bearish pressure stepping into the market. So with that being said, on AUD JPY, this is slightly different compared to GBP JPY because we are already in discount areas on this chart, and you can simply denote that from placing a fib and then looking at where the 50% area is. So you can clearly see that we are already in discount areas for AUD JPY. So all I'm doing is I'm marking areas of liquidity. This is a previous weekly high, and you can clearly see that multiple times price action that come into this area and basically pushed off. So it's acting as some type of resistance, right? And what I'm anticipating is for price action to push and break this resistance quite clearly, and then somewhat see a shift of structure, because this bullish impulse will create structure in the push to the upside, whether it's on the 15-minute, the 1H, whatever the case may be. We'll see some type of structure being formed and grabbing that liquidity. And when you see the shift of that structure, then you can then start to anticipate that, okay, we are starting to shift the sentiment and starting to actually show that footprint that we could potentially start moving bearish. Now, this actual bearish push that I want to see shift structure, I would like it to have an impulsive nature. I would like to see some gaps in the market be created with a very impulsive and momentous push to the downside. Similarly for GBP JPY. Now, with that being mentioned, once I have this analysis done, I think we could target equal lows to the downside for both of these pairs from a 4H perspective. Now, whether that gets filled in 1 week or in 2 weeks, I don't know. But I think there's either, if you were a swing trader, you can target these equal lows to potentially be filled, or essentially what you can do is that once we do start shifting bearish, you can start to take short-term or intraday trades or even scalping trades all the way to the downside once you do see that impulsive push to the downside after grabbing liquidity. Now, with that being mentioned, now let's add on top of that our correlation, which is the COT report. So when you're coming into the COT report, you can see that JPY, or Japanese yen, is heavily net positioned for buys. We are 171,855, 171 1,855 net position to buys, right? Then you look at the net change. The net change is actually pretty bullish by 24,788 change into buys. So you can see week on week that from last week to this week, there was actually 22,000 contracts extra being placed long position on Japanese yen. And that's why I was saying, with the sentiment of the market right now, there's a lot of people shifting their money to safe havens just because of the uncertainty in the world. And then what you can see, that the shorts had actually gotten less. So more and more people are actually closing their shorts on Japanese yen and starting to move their money into long contracts for Japanese yen. So that essentially shows me now that we are pretty bullish for Japanese yen, which kind of aligns with our bias on what we're looking for, right? We're looking for those liquidity grabs to the upside and then the continuation to the downside, right? That's what we're looking for. And that essentially aligns with what we are looking at. Now, if you look at Great British Pound, last week, this was around 15,000 net position buys. Now you can see that we're getting closer and closer to that zero neck position, essentially, or we're getting closer and closer to shifting to shorts. So what that means is that we are essentially, contacts are getting less for longs, right? So that means pound in and of itself, from a institution perspective, is there's less people having shorts, or there's more people closing their short contacts, right? So you can see that the net change was actually 10,800 from a perspective of the shorts decreasing or the longs decreasing and the shorts increasing. So you can see that the long positions changed by -6,000, meaning there's less longs in the market right now, and then the short positions actually increased by 4,000. And that's important because now you can start to see that you are not only your analysis and your technicals are aligning, but also you can see that the institutions are actually starting to, number one, close their long positions on pound, and then they're opening more short positions. Then on yen, they are opening more long positions and they closing their short position. So that aligns with our analysis, right? And then you can start to anticipate that as long as you have points of interest or areas of interest where you want price to go into, to then start to make sense of an entry, you are following the footprint of what the institutions are actually doing. So now you have that information behind you. You can then start to now essentially put together a roadmap for this particular pair throughout this week moving forward. So as I put my roadmap ready together, I know what I'm expecting. I'm expecting that push to the upside, shift of structure, and then push to the downside, right? Now, if we do break below these areas right here, then I think there's a high chance that we could also start to see price action pushing to the downside. So those are things that you need to start planning. You need to know what you are looking for, and then when you come to your commitment of traders report, you just add in more um confluence. And then similarly with AUD, with Australian dollar, you can see that our net positions are short, right? So when you come to your Australian dollar, what do you see? You see the big impulsive push to the downside. We see the correction, and now you're starting to look at where price action could potentially start to reverse from. And that's why you have these areas of liquidity, or you have your points of interest, where if price action do starts to reverse and you do start to see that impulsive bearish push to the downside, you can now start to capitalize on not just your technical analysis, but also on the fact that you are trading alongside the bank, right? You're trading alongside large institutions that are moving the money. So when you start to see these movements happen, all you need to do is, number one, find the shift of structure to confirm that we are moving bearish, right? Because right now we are in a corrective market where price action is forming a uptrend internally within this trading range. So we have the high of the range, we have the low of the range, and we're moving in an internal bullish structure right now. So all we need to do is find areas where price action could potentially reverse from. And when you find those areas, if price action do reverse from those areas of magnetization, then what you can then do is start scaling down time frames to anticipate where you could potentially find your entries on those particular pairs that you are interested in. Now, you might not find entries on all the pairs, but you will find an entry on one or two pairs throughout the week, and that is good enough to get a 3 to 5% or 2 to 5% a week, and you will be chilling essentially. So once we get the breakout structure, we scale down time frames, we look for our entry model, whatever your entry model is, look for that entry model, have a safe stop loss, and you know that you can target any points of interest in this trading range that we have from here all the way down. But we have created all these points of magnetization in creating this internal range to the upside. So you can target any of the areas that you think price action is more likely to go to and hit your take profit. And that's the way we implement and we apply the commitment of traders report to our analysis, number one. And then once you have your analysis, it's all about just scaling down time frames, staying focused throughout the week, and watching for what you anticipated throughout the weekend to play out. Now, obviously, sometimes your plans get invalidated. Sometimes you need to have a plan B. Plan B should be that if price action starts to shift structure to the downside before actually collecting liquidity, what are you then going to do? What's your model then if price action just starts to tumble throughout early on in the week, Monday, Tuesday? What are you going to do if price action takes these areas out now and you're so close to this? Can you find an entry? Is it in your trading model? Then it is all about staying disciplined, following your trading plan, and executing on your trading plan. If your trading plan says there's no plan B, then it is what it is. If your trading plan allows for a plan B in these market conditions, then what you need to do is essentially execute on those positions, because I do think that my plan B would be to see if price action can take out these lows right here. And if price action can take out those lows, then essentially what I'll be looking for is on the 1H to see price action, creating liquidity, maybe in the Asian range, maybe a daily high getting taken out, to then start to see something somewhat like this to create these equal lows, or even potentially push to the downside with the way the institutions are setting up now with these particular pairs. So I am very interested in GBP JPY for this week. I think there's going to be a ton of movement, whether it happens early in the week or late in the week. It's just about staying focused, staying attentive, and paying attention to what's actually happening. Set your alerts. I'll be setting an alert above the 189 area, or 189 800 area, and then the 190 100 area, just to know that when price action does take those highs out, what is our reaction out of those areas. And that's your first step. What is our reaction out of these areas? Do we break structure? Do we hold structure? What's going to happen? And then you can then start to anticipate your next steps and scale down timeframes, look for your entry models, and follow the money. Essentially, follow the money, follow the money, follow the money. And with that being said, from your boy Marcy at the Modern Day Trader, I hope you guys have a profitable week. Happy Easter. I hope that everybody got to spend time with their families, got some rest in, got some work in, and I really hope that it's a profitable week. Further, we coming into the second last week of the month. So stay disciplined. You can still end the month up in profit. Just follow your plan. You can still do good numbers in the next 2 weeks. So stay disciplined. Stay consistent in your approach. And please don't forget that your unmatched perspicacity, coupled with your sheer indefatigability, makes you a feared opponent in any realm of human endeavor. From your boy Marcy at the Modern Day Trader. Peace out, man.